Hello and welcome. This is BQ Prime. I am Agam Vakil and we're talking about IPOs here. Now, while we've had a flurry of activity and while we have a whole bunch of recently subscribed IPOs which will be listed on the bourses this week, and we have another bunch of IPOs which will in fact also open for subscription this week. But the real question is that what do we do with the current valuations with which and at which these IPOs are offered for retail investors? To give you the latest in terms of the update, we have some comments from the SEBI chairperson, Madhabi Puri Buch, who's said that it is better for retail investors to wait for the price to settle after the IPO and perhaps also watch out for the first 1 or 2 quarters results, post which there could be some potential as far as the IPO is concerned. Furthermore, she also adds that they should invest through secondary markets, and primary markets may not necessarily be the best way to get into IPOs, especially given the kind of valuations at which they have been offered. And moreover, when it comes to high valuations, the chairperson also mentions that we will address if IPO price justification is given in is meaningless English, and we will review it as the pricing must make sense. So these are some of those comments coming in from the chairperson, and a very pertinent discussion that needs to be had is from the retail investors' point of view, whether or not some of these IPOs can in fact be subscribed into. So, to take you through the latest example, while Honasa Consumer was considered to be an expensive IPO, and even after the listing, we've seen a further up move. On the other hand, something like a Tata Technologies was considered to come in at a significant discount as compared to some of its already listed players. So we're looking at a divergence in many ways in terms of IPOs and valuing them and the perception around them. And to take this discussion forward, we are joined by Dharmesh Kant. He's the head of equity research at Chola Securities. And we also have with us Astha Jain. She's a senior research analyst at Haim Securities. To both of you, thank you for joining in. Dharmesh, I start with you. I want your opinion on this particular aspect. With the kind of flurry of activity that we have seen in the primary markets, my first question to you would be whether or not you would in fact go ahead and invest in the primary market, or would you in fact take some of those cues offered by the chairperson and wait before you jump into some of these companies?
Yeah, good afternoon, Agam. See, it's subjective call to be taken by the investor whether they want to go in for the primary market or through a secondary market. Both the choices are open to you, and anyways, if with the category oversubscription which is there, you get hardly any share or the wallet share of the listing which you want to have. So that's another question to be taken into contention when you are selecting an IPO. As far as valuation of IPOs are concerned, I think it's a very dicey and delicate matter, and it's very difficult to, it's very easy to say in the hindsight, but very difficult to say on the onset whether the valuation is right or wrong. It takes multiple years for the valuation to be discovered. Just to give you a few examples in point, for example, let's say the case of Infosys. So I'm not talking about the valuation at which the pricing at which it came, but just look at the profitability thing. The year of listing, it had only 8 crores of profit, and last year it has 24,000 crores of profit to be there. Same with TCS, 25 crores to 42,000 crores. So this is 45%, 75% CAGR on the profitability itself. HDFC Bank 120 to 46,000 odd crores, Bajaj Auto 650 to 6,000, Titan 20 to 3,300 odd crores. So these are well in excess of 40-50% of a CAGR over 2 decades. So if company is able to perform such, so there may be case in point where at the time of listing the promoter is convinced about the valuation multiple. And we may see, the IPOs may look at 100, 200 times PE multiple, but if you have profitability CAGR of 40-50% over a period of decade, it can be justified. But this is what again we only get to know in the hindsight. On the onset, it's more of a subjective judgmental call. So choice is open to you. Nobody is forcing you to subscribe for the IPO. You can always wait for the secondary market to buy if you don't want to do it on the IPO at the time of listing.
Okay. Right. Asa, to take this same topic with you as well, how would you determine whether or not you want to, in fact, subscribe to an IPO or perhaps wait after the listing?
Good afternoon to everyone. So I'm in subscription to the IPO first of all because we deal directly with the retail clients. So what I tell, what psyche is going on the retailer's mind. Most of the retailers, I tell you, they come for only listing pop. I mean, this is the psyche. I might be wrong. So, but on the first day of the listing, they want to really, exit most of the retailers. So hardly, I mean, around 20-30% of the retailers are of such category which really want to hold long term. But we always advise our clients, on the basis of two phenomena. First of all, for the listing gain purpose, and for the secondly for the long term purpose, because we know our clients are of two category, for listing gain also and for long term. So in both the cases, fundamental research holds a key importance. So we always see about the issue. First of all, the promoter background, the kind of market share companies into macro fundamentals also we take into account. And the most important parameter nowadays is the valuation, which we always see before giving any recommendation on the IPO, because it holds the key. We all know in the case of Honasa, consumer valuations were a little bit on the higher side, and that's why we have seen the muted response from the all category of investors. And even on the day of the listing, also we have seen the IPO has not shown much of its performance, as in the case of other IPOs like Sai and DLM. This is what I'm talking about in the last financial year only. So in the whole this financial year of FY 23-24, 38 IPOs came till now. And out of these 38 IPO came and they got listed. 33 of them are such which given the returns on the listing day. So it's like 86% of the IPO which are right now coming are giving returns on the listing day also. And the retailers are mainly looking after that. So regarding the research, we always look after each and every fundamental of the company, and then we give the subscription rating. In case if it is a expensive one, then we never say go for listing gain, because for the expensive one we always say let the price settle and then enter into the IPO or the secondary market listed category. So I really agree with what SEBI chairman has said, that for the retail investors, because their psyche is for the listing gain, but it should not be there. They really need to see how the prices move, let the prices settle for some time, and then enter if it is a real good category stock. Like in the case of Sai and DLM, if you see right now also it is giving 100% return to the issue price, and it got listed in July. So you just see the time frame. Within the 5 to 6 months, 100% return has been given by discounter Senco Gold, for the example. These all are I'm talking about the recent listings only. 100% return if I compare it to the yesterday's closing price. So yes, let the IPO price settle, and if the IPO is of a good quality, the company's fundamentals are strong, then even I do agree that enter it on the later on, because if company is strong, then definitely huge returns can be set for the long run also.
Fair enough. Dharmesh, coming back to the point that you were trying to make earlier, for all the fundamentally strong companies, they've been mega multi-baggers over the course of the years. My question then is that if you do find IPOs with strong fundamentals, but if they are being offered at a certain premium, after being offered at a certain premium, you are still seeing a considerable amount of subscription on day three. Would you go ahead and advise your clients to still go ahead, or would there be a wait and watch as far as this aspect goes?
See, again, I mean, investor education is something different. Pricing of the IPO is a company's prerogative. I mean, the management can decide the price. Whether we take that price or not to take that price is upon the individual analyst or research house or the broking house, I mean, judgment. So those all are separate issues. I mean, listing gain is a speculative activity which one is trying to do. And say if in 6 months, if something goes 100% or 50%, again, I mean, these are all very subjective things, and that should not be the benchmark for selecting a fundamental stock company. I mean, fundamental is something strong, as I took the name, 5, 6 names I took. These are very fundamental classic companies, and which we came to know only in the hindsight. Today we can say that there was a TCS or there was an Infosys or SDFC Bank or Bajaj Finance or a Titan. When the time of its listing, nobody had, I mean, the vision may have been there, but there was no proof of putting or data point to point this out that this is 40%, 50% or 70% CAGR is there. If I'm convinced about the story and I know that the ride is there for a long-term haul, 5, 6, 10 years down the line, the CAGR of PAT can be 40%, 30% kind of a thing. So even if it is coming at say 200 times PE multiple, I will definitely go in to subscribe for the IPO as well. And after that, if my quota is not being fully filled, I will wait for it to be listed and again go and buy in the secondary market, whether it is higher or lower. As far as my conviction about the company is there, and I do see value gap being there at the price at which I am buying and the final price which I am going to realize from that, we would be doing that, and we have done that earlier. I mean, 3, 4 IPOs we have already come out with IPO, like EMS Limited was there, JSW Infra was there. So we said, and even Tata Technologies we have come out, and IDA we have come out with a buy subscription. So I mean, all are defective value. Even going by the just if you are looking at the current pat on which they are sitting on last 3 years kind of pat trajectory, only Tata Technology has come at a discount. The others were almost fairly valued. But we were looking at say, will this company will stand 5 years, 6 years down the line, and then we did find value. So we have recommended buy. And again, I mean, this is purely a subjective thing. I mean, result is known only in the hindsight, and rest is just a judgmental play.
Asa, let's take the conversation forward and move on from just the listing pop. If you have a company which is fundamentally strong, it's listed with a lot of gains with respect to its issue price, and maybe a month down the line, 3 months down the line, it has continued to move up, and if it's not continued to move up, it still trades around the same levels at which it was listed at, and which was, of course, at a significant premium to its issue price. What do you do in these circumstances? Now, we are assuming that the company has very strong fundamentals in this case, but even after a month, 2 months, 3 months, investors often don't find that opportunity in terms of valuations for the entry point. What would your perspective be when it comes to such cases?
So in such cases, see what valuation is. It is nothing but expectation, first of all. So if some valuation being given to any IPO, so there must be a strong expectation behind its future financial performance. Otherwise, there might be chances because if you see the data on the first day of listing, many big hands leave the IPO. I mean, you know that in fact, if you see first quarter filing of the shareholder pattern, then you find on the I mean on the day of IPO how many retailers were there, and on the first quarter filing how many were there. So we always see that. So many being hand they really leave. But if the valuations are still at the on the higher side, then definitely there must be very strong fundamental behind it, and that's why that stock is not at all falling from its peak which has made on the listing day. So what we suggest our clients on that wait for some time, because in every 3 months we get the results. Quarterly results are always round the corner. So I always suggest them, since the price is not at all moving on the downside, so it's better let the results come. If there is something which is really very good, then definitely it will be there in the results, and then we can take a call on the basis of the result analysis as well as on the basis of management commentary, because after getting listed, even management are free to give future guidance. During the IPO, they are in the silent period, so they never talk about their future projections. But after getting listed, even they can talk about the future guidance of the financials. So we just ask our clients to wait for some time, let the results come, let us analyze what is going on with the company, and in case if whatever management is suggesting that still makes a sense that this issue is again, the valuations can be more from here, then definitely we ask them to buy on the later on prices also. So
Right.
the whole point is, if it is not falling from its peak, then definitely we ask our clients to wait for some time, at least for some results to come, and then take a call.
Right, fair enough. Dharmesh, a final question then for you. Among the spate of IPOs which have come through recently, anything that stands out for you? I know you briefly alluded to Tata Technologies, but if you can talk to us about that, and besides that, do you have any other names which have looked interesting for you?
Yeah, definitely. I mean, the EMS has run its course. I mean, the stock price is pretty up. So that looked pretty interesting in the type of business they were into. JSW Infra again looked interesting. And Tata Technologies, a good point is, I mean, the management has been benevolent and they have come out with a bit, good discount. So that is the, again, it's management's way of looking at things. So, but that looks pretty interesting. The business model is very solid. They are into automobile ancillary business and that too into electric vehicles segment. So they have already given the proof of their prowess through JLR segment where entire electrical equipment is supplied by them. And they are getting many MNCs and diversifying their portfolio of client basket as well. So that looks pretty interesting to us. I think even RIDA is likely to do well, as was the case in IRFC. So mostly in line with that, data is likely to do well. And power sector is in its own growth trajectory with almost 300 gigawatt of power, upcoming power into renewable energy. They would need funding and a huge funding would be required for that. So well poised, I mean, all these companies are likely to do well. I mean, the only thing one has to be mindful of while applying for an IPO, whether it is through listing or through the secondary market, is the future growth trajectory of the company. As long as your calculations suggest that there is a value gap to be captured, then that is why we all are here in the stock market to take advantage of the value gap which is there into the company's play. So it should be avoided.
All right, fair enough. Asta, the same question for you as well. Anything that stands out for you in the recent spate of IPOs?
So many of them have already got listed at a huge premium, and they're really riding at a huge premium right now also. So one IPO which I can talk about right now is the Ask Automotive. This company is into the manufacturing of the braking shoe, etc. And their client base is really very strong. All the top names in the automotive sector are their clients. So this company, it has came out with the IPO, but still it has not performed so strongly on the bourses. Even if I talk right now also, because at the 282 they have the issue price was 282, and right now also it is quoting somewhere at around 295 to 300 odd level. Today's price I have not seen. So this company has a good potential. I think it has a potential to perform strongly on the bourses in the coming future, and it has still not performed that much. So in that category I put Ask Automotive. Otherwise Tata Technologies is the all-time favorite, so no doubts in that. Irida is also looking good, and I'm in between Flair and Gandhar. In fact, I think the Flair is also has a strong potential because this company has a strong market share, and it is quite an old company. They have a history of 45 years. They are in the manufacturing of pens, and the most important point which makes them differentiated from their peers is their margins. They have commanded very strong operating margins. So, I mean, these IPOs are looking good to us, but in the past, Ask Automotive has not performed so strongly. So, I would like to go with that.
All right. Well, we'll leave this discussion right there. A lot of caution coming through from our experts, but also a lot of opportunities, potential opportunities on the horizon. And on that note, Dharmesh and Astha, thank you so much for joining in and taking us through your views on this very important topic. We'll, of course, continue this discussion, and we'll have plenty more. Signing out for now, but lots more lined up. Stay tuned to BQ Prime, and we will keep bringing you more.